So Michael, let me pick up some of the questions that we see coming in from the floor. One which I think we've probably addressed, but to bring that out, the question around regulation. US dollar hegemony. How do you view that and it as a threat, and protecting that as a threat to to Bitcoin?
Yeah, I think that ultimately, first of all, it's pretty well regulated now, and every institution that you've read about, and there's probably 1,000 big ones that bought Bitcoin in the last 12 months. They're all buying this on regulated exchanges subject to anti-money laundering, know your customer rules. And so 2 or 3 years ago, I don't know I could say that. I think that the maturation of the on-ramps this year is a big part of the story. Now, there's a little bit more ambiguity in the United States around the last element of parity with stocks and bonds and other assets. And I think that if they clarify that last bit of regulation, it'll be bullish for the asset class, because all the institutions and the insurance companies and the investors, they all want very clear AML KYC regs, and they're comfortable with it, and they're just buying this instead of other assets. So no one has suggested any kind of regulation that isn't, in essence, just establishing parity on AML KYC as an asset class. And there's a little bit of discussion of clarification of what digital assets are security versus property, but that has an impact primarily on the non-Bitcoin crypto assets, Ripple and the like. It doesn't really affect Bitcoin. Bitcoin is kind of the oldest, most decentralized, least ambiguous, clearest form of digital property in the world. I think you will see regulatory FUD about what are the Indians going to do, or I heard something's going on in Nigeria. Look, in countries that have weak property rights, and more authoritarian regimes, and the Indians they just kind of outlawed money, and you had 48 hours to give up all your cash 3 years ago, and you had to turn in all your bills, and you had to get some new bills. Every 3 to 4 years, the Indians do something that's kind of quirky with regard to their currency. I don't think that affects the way people view Google, Facebook, Amazon, or Apple. So the key to keep in mind is this is a digital monetary network, and it provides the ability to store digital gold on a big tech network. And it's going to work really well in Western Europe and the United States and Singapore and Australia and every place that's comfortable with digital networks. They're going to be fine. And there's going to be FUD else. And it'll go underground in Nigeria or Venezuela or China, and it'll be there because you can't get rid of it. It's encrypted, and anywhere you've got a computer or a smartphone and a firewall, you can hold this. In fact, it's so hard to get rid of. I can put the seed phrase in my head, and you can rip the phone out of my hands, turn off the internet, take away my computers. You still can't get the stuff out of my head. So it's the ultimate sovereign digital property ever invented in the history of the world. It won't go away, but it will flow more clearly as property in the Western world.
Okay, so taking I guess a slightly different direction then, with respect to your treasury strategy, is it specifically aligned to Bitcoin investment? Have you actually made the decision not to look at other digital assets, not to look at sort of DeFi and other parts of the market? Are you constrained at the moment, either sort of specifically or at a mandate level to Bitcoin?
Look, Bitcoin is the crypto asset network. If you're designing a decentralized network to store value for the next 1,000 years, that's Bitcoin. The protocol is optimized for digital gold, store of value. It's slow, it's secure, it's like impenetrable. It's granite in cyberspace to build a city on. The other cryptos, they're all trying to do different things like DeFi and privacy and provenance and be optimized for, non-fungible tokens and art. And they're all interesting, but I would call them all venture capital investment. They're all ventures. They're adventures. They're a lot more risky, a lot more complicated. If you have a venture fund and you want to invest in crypto ventures, you do that. If you actually have widows and orphans treasury, you're a stodgy insurance company, and you simply don't want to lose the money, you're not trying to invent something new. You don't want to juggle razor blades. What you want is just to have $1 million and put it on the network and not have everybody take it and not lose it. And so no bells and whistles. So Bitcoin is a treasury reserve network. Everything else is pursuing a different total addressable market. By the way, in my opinion, the addressable market for a treasury reserve asset is 100 trillion. The total addressable market for everything else is like, I mean, $1 trillion is a lot of money, right? $1 billion is a lot of money. $1 trillion, there's only 5 companies that are $1 trillion in market cap. So I don't really think you need to look that far to find the high opportunity dominant network. I want something 100 times bigger than the next best thing that's fit for purpose.
Okay. So again, let's maybe taking now down into the weeds a little bit, because I think as some of the corporates that are listening today, one of the things, and you alluded, I think, very briefly to this, was to accounting policy and how Bitcoin is held on the balance sheet. How did you deal with that sort of accounting treatment at the moment and the impact on sort of the valuation on the balance sheet and the obvious then move through to share price? I mean, that's got to be a key consideration for a treasurer, right?
Yeah. So if you buy Bitcoin as a naked asset, if you want to own the actual Bitcoin property, right now the accounting for it under GAAP is as an indefinite intangible. So it's actually not a great accounting treatment. It's not terribly transparent, and you can mark it down, but you can't mark it up, right? And so if GAAP accounting is important to you, then the other approach is you buy it as a fund. You basically buy a fund whose primary strategy is to buy Bitcoin. So if I owned a fund, then I would have fund accounting, and it's likely in that case that you get fair value accounting. Right? They both have pros and cons. If you go with the pure Bitcoin, you have more optionality, but you're gonna have to rely upon pro forma reporting in order to make that clear to your investors. And I would say, legitimately, the only intelligent concern that I can articulate is if you're a CFO with a beautiful P&L and a beautiful balance sheet, and you buy the underlying Bitcoin, it's going to make it ugly, or it's going to make it muddy. So that's a legitimate concern. And so in that case, I would probably say you want to look at it as a fund and think about buying some as a fund.
Okay. All right. That's great insight. Thank you. We're sort of ticking down probably towards last question or two. What worries you then? You're obviously heavily invested, heavily convicted. What worries you around the investment paradigm, the market? I mean, look, I think keeps you awake?
A rational, honest person has to accept that there's always black swans. There's unknown unknowns. It's 12 years old. There's a lot fewer in 12 years, but you have to accept the fact of a black swan. So I can't discount that. And then beyond that, I just expect generally. It's such a good asset. It's such a good asset that what you see is billions and tens of billions and hundreds of billions of dollars of assets flowing out of other assets. So I think that you're going to have banks that don't embrace it. They'll be threatened by it, and it's threatening to gold, it's threatening to silver, it's threatening to bonds, and it's upending the power structure in fintech. Like Square and PayPal, they're getting millions and millions of new users because they have it, and that's threatening to Facebook and Google. So I think that it's such a good thing that you're going to get pushback, and the pushback will be either FUD, environmental FUD, oh, it's not great for the environment, or you'll get regulatory FUD. I heard that someone's going to tax it, or it's possible theoretically that someone might theoretically do something, because what do you say when it's, but if people didn't have that FUD, I feel like it would all be trading at $1 million a coin right now. I mean, in theory, why in the world wouldn't you have replaced all of gold, all of silver, and all negative yielding sovereign debt with this stuff? And that takes you up to 30 trillion right there. So I think that the FUD will come, and I think that there'll be a lot of entities that'll have a vested interest in mudding those waters, just because something that's growing 200% a year that accelerated to grow 400% a year is disruptive. Matt, I would say, and I don't think this is hyperbolic, I think that Bitcoin is the single most disruptive technology in the world right now. It's a monetary fire. And if you want an indicia of that, it got to $1 trillion in 12 years. Facebook still didn't get to $1 trillion. And it took Google 22 years, and it took Apple 42 years. Nothing in the history of technology ever got to $1 trillion in 12 years without a marketing budget. Yeah. So it is disruptive, and there's going to be sparks that will happen. Just like, you go fast, you break the speed of sound, you're going to get a shock wave.
Michael, terrific. Look, we're right up out of time. Thank you very much for joining us.